Why are house prices rising? I'm going to take you through the data that drive these statistics and explain why house prices are rising at the moment, and end this video on what the data shows us will likely happen to house prices over the next 12 months. Because this is something I care about understanding as the founder of a UK-wide home buying company, British Home Buyers, a nationwide estate agency, British Home Sellers, that currently has over £120 million of property on the market at the moment. So understanding this stuff is really key to mine and my client's success. So let's get into it. Section 1, the economic outlook. So the National Association of Estate Agents produces this smart monthly report that I'll link in the description below, that does a really good job of breaking down the activity us estate agencies are experiencing right now. So a lot of this video will reference my opinion on this report, or you can go ahead and read that 20-page report if you want to dive into the detail yourself. But a key thing to consider when understanding the property market is to understand the state of inflation. Because we know if inflation heads above 2%, the chances are interest rates will rise, or if they come below 2%, the chances are interest rates may fall. The Bank of England uses the Consumer Price Index to measure inflation and meet its 2% inflation target. So that blue line on the graph you can see. And as you can see, that is currently sitting at about 2.2%, which is good news. It gives us confidence that we're not likely to see interest rates dramatically increase or decrease. They're likely to stay relatively stable, hopefully continuing to drop little by little if inflation keeps stable after each rate change. However, something that is often overlooked is to look at the CIPH rate, which, as you can see, has been consistently on the rise. CPIH is the most comprehensive measure of inflation. It extends the CPI rate, the usual rate you hear about, and instead includes a measure of costs associated with owning, maintaining, and living in one's own home, known as owner-occupiers housing costs. It also adds council tax costs as well, so it creates a more complete picture of inflation for homeowners. So although that standard inflation level we keep hearing all about on the news has been dropping to that 2.2%, when you add in the costs of owning and maintaining a home, it's actually been rising at a pace of 7% a year. Now, because the biggest cost of home ownership is generally people's mortgage payments, the thing that will have the biggest effect on this rate dropping in the future will inevitably be interest rates continuing to drop. So really the conclusion to this is, yes, inflation is dropping, but when you tie in home ownership, it's actually still rising, but hopefully interest rates dropping will solve that. So how are house prices faring right now despite this? Section 2, current house prices. Well, we all know they've risen. You can see here that despite interest rates still being higher than we'd all want, house prices have been rising across the board. And you can see this isn't recent. They've risen 2 quarters in a row now on the back of 2 quarters where they had dropped. Now, we often hear about house prices in general increasing or decreasing, but often what is more important to you is to understand house price movements in your local area. And you can see that despite an increasing in house prices nationally, it isn't distributed equally across the UK. Have a look at your area now. But the North East has seen an annual increase of 3.6% in house prices compared to the South East seeing a 0.3% drop in house prices over the last year. So you can see there's quite a bit of disparity. Ultimately, a key driver that is going to affect house price growth in your area is going to be demand. If buyers out there grows in number and supply stays stagnant, then prices are likely to rise. So what's happening to buyer demand? Section 3, buyer activity. Well, without question, the demand for housing has been increasing, and increasing by quite a lot. you can see Zoopla reports buyer demand has increased 20% year on year, and the number of actual sales agreed has increased 23%, which clearly demonstrates that not only are there more buyers out there, but they're more decisive in making buying decisions. My estate agency, British Home Sellers, that operates nationally, has actually seen a 57% increase in sales this year so far. So from my perspective, these numbers look a little low, but often the balancing act that determines how much house prices increase by each year comes down to that balance between buyer demand and seller supply. You can see back on that graph that although sales have increased 23%, the stock of property on the market is also still, despite that, 14% higher, even though there's been that increase of buyer demand. So how is seller activity affecting house prices at the moment? Section 4, seller activity. Well, seller supply is actually keeping a lid on house price growth. The stock of homes for sale has continued to increase and now stands at a 7-year high of 33 homes per agent. This is really important because this is giving buyers way more choice, as this high level supply will help slow down the level of house price growth. It's why right now 20% of homes listed for sale on Zoopla right now have actually dropped their prices by more than 5%. For instance, if you look back at the graph, you can see 2021 and 2022, the supply of property dramatically dropped because there was so much demand at the time over COVID. And this was the main reason why we saw house prices increase so much over that time. I mean, estate agents, we as a business, we were literally running out of property to sell. Now we're sort of seeing a reverse in that in a way. And the reason I think this is likely to continue happening is because of this. 36% of people surveyed reported it was very or somewhat difficult to afford their rent or mortgage repayments. And this links to that CPHI inflation rate I mentioned earlier in the video. In reality, inflation rates for homeowners isn't 2.2%, but 7% when you include the reality of home ownership costs. And this is ultimately leading to an increasing rate in mortgage arrears, which ultimately leads, sadly, to higher repossession rates. You can see here they've only recently started spiking, but really mainly due to the lag you get with this is falling behind on mortgage payments to eventually being repossessed can take 6 to 12 months. That spike we're seeing now in repossessions, in my opinion, is the start of an upward curve in repossession rates over the next 12 to 24 months. This pressure on a portion of the market is ultimately going to release a lot more supply of property into the market that should help offset the rise in buyer demand as interest rates continue, hopefully edging downwards. But it isn't just house prices you need to think about when it comes to the property market. Section 5, the rental market. Ultimately, the biggest competitor to buying a property is simply renting a property. Now, I know this is an extreme example, but as rental yields got squeezed in London, it actually started to become more desirable to rent for some people, because when you factored in the cost of buying, running, maintaining, the stamp duty involved in purchasing, sometimes it just made sense to rent at a 3 to 4% yield of the property's value rather than just buy the property. But the more relevant point is for the majority of people, if the rental market gets even harder for tenants, that becomes more of a motivator for people to want to get out of the rental market and buy. And we can see that although demand relative to supply is starting to slow down in the rental market, there are still 8 applications for every available property for rent at the moment, which is just madness. It demonstrates, certainly for some time, there is going to be a continued focus for most people renting to want to buy, and that in turn adds demand to the property market. So will prices keep rising? Well, yes, because 1, interest rates have been falling and are likely to continue falling. 2, it is far more desirable to buy than rent. And 3, we're not building enough new homes. The better question to ask is, how quickly will house prices keep rising? Well, What do you think? Comment your prediction below. My prediction is about 3%. I'll see you in the next video up here.